What if you invested $1,000 in Google on opening day? What would that investment be worth today, and how many shares would you actually have of Google? In this video, I'm going to answer those questions and a little bit more coming up. Hey everybody, welcome to the What If I Invested YouTube channel. I'm Donnie, the co-founder. Google made its first debut as far as being publicly traded on August 19th, 2004. But what's really important is that this company was actually created back in September of 1998 by Larry Page and Sergey Brin. They were both PhD students at Stanford University, and they created Google while they were actually working on their PhD. Now keep in mind, Google is actually worth over $1 trillion as far as its market capitalization. And Larry and Sergey both have a combined total of a 14% stake in the company, but they control 56% of all the voting rights within the company. That means these two are the biggest decision makers behind Google. So now let's get into our investment. So back on August 19th, 2004, Google first debuted at $85 a share. That means our $1,000 investment would have been able to get us a total of 11 shares. You know, we're not counting any fractional stuff, so just 11 shares with only $1,000. So now let's get into how many shares you would have today in 2021. So there's really been two technical stock splits, and the whole stock split that occurred back in 2014 was actually pretty controversial. The way I want to break this down, there's actually three classes of shares within Google. So you have your Class A shares, which is represented by Google. That was the first offering, and that's the one that is GOOGL for the ticker symbol. Then you have your Class B shares, then you have your Class C shares, which are publicly traded as well, and that's GOOG. So those are the Class C shares. And the difference between basically the C and the A and B, C has no voting rights. And the reason Larry Page and Sergey Brin wanted to do it this way was because they didn't want to dilute their voting power, and that's why these Class C shares were created. So on March 27th, 2014, there was a 2-for-1 split. That basically means our 11 shares then turned into 22 shares. Now, if you want to learn more about stock splits, go check out a video I created down in the show notes below. You can go check that out to do a deeper dive into what stock splits actually are. Just know that our 11 now turned into 22. Now where it gets tricky, right? That was a big controversy whenever they set up their stock split that way, where basically there was no voting rights, because now you have two different ticker symbols, right, for the same company. Now those Class C shareholders were worried that it wasn't going to trade as high as the normal Google as far as GOOGL, that ticker symbol, because it had no voting rights. And because of that concern, Google, within the first year, they said if there was a difference, that they would pay out a little bit of funds. If you want to read more about that, you can check it out in the show notes below. So they went ahead, and instead of paying an actual distribution, what they did was an additional stock split for everybody who owned Class C shares. On April 27th, 2015, there was another split with those C shares, and this was basically a form of compensation. And the way this split worked, everybody that had 1,000 shares, they were then awarded 2.7445 shares. That means our 11 shares, the way the math works out, you basically have to take 2.7445, divide it by 1,000, which would then get us a 0.0027445. Then we need to multiply it by our 11 shares, which then comes out to 0.03 shares. That's what we got from that split with our initial $1,000 investment. Now the total shares that we have are 22.03 shares of Google. From 2004 all the way to 2021, you'd have seen it fluctuating to where we get to the high. And right now, as far as the high, the 52-week high, actually the highest it's ever been, February 16th, which happens to be the highs for both the Class A shares and the C shares. So first, let's look at the A shares. That high is $2,145.14. So if we multiply that out by our 11 shares, remember, because we have 11 shares of Class A and 11.03 of Class C shares. So those 11 shares are $23,596.54. So we need to remember that number. Now we have our 11.03 shares of Class C, which actually happen to be higher than the A, which is surprising because they have no voting rights, was $2,152.68, which we multiply those out. We have $23,744.06. Now we need to add those together. We have $47,340.60. So that means over 17 years of having this investment, our return is over 4,000%. If you want to watch other videos just like this, definitely check out this video, What If You Invested in Facebook when it first IPO'd, or check out one of our latest videos here. Otherwise, until next time, on investing.